Cyber liability is a very hot topic in insurance these days, primarily because most insurance policies, typical insurance policies for businesses, exclude it. It's not covered by a typical business owner's policy. So it's a separate policy or an add-on endorsement to a business policy. You may think that your business doesn't have an exposure in this area. Let's say you don't do a lot of internet business or commerce over the internet. But you might be interested to know that Target, the big breach that happened last year or 2 years ago, the people that attacked their system actually gained access through the heating and air conditioning contractor that was working on Target's systems there. So it could happen to anyone, anybody that touches a computer, anybody that has customers' data on file, be it names, addresses, social security numbers, credit card numbers, is at risk for a cyber attack and should consider cyber liability. Most homeowners insurance policies will provide 50 to 70% of your home's value for your contents or your personal property, your furniture, your possessions. Typically, that's enough coverage for the average homeowner, but sometimes you may have additional items that are of high value, let's say an art collection or silverware, jewelry, things like that. In this situation, you may consider purchasing an additional rider to cover those items independent of your contents coverage on your homeowner's policy. If you have a loss to the property in your home, the insurance company is going to ask for an inventory of the property that you've lost. The best time to take an inventory, however, would be before a loss occurs. So good suggestion would be to go into each room, maybe take a video camera and videotape the items that are in your home. Describe each one. This is a lamp and the value is $200. This is a piano, whatever it might be. And then keep a copy of that tape in a safe deposit box or some type of fireproof safe. It can save you a lot of trouble in the event of a loss. Actual cash value is the amount of money an item is worth at the time of a loss. It takes into consideration the value new minus wear and tear and depreciation. A great example of this would be, let's say you purchased a TV set 5 years ago and now that TV set's been stolen. The insurance company will come in, determine the cost to replace that item new, and then depreciate for the wear and tear or the age of the item. Any company that has one employee, and even if that employee is your cousin or your next door neighbor, should consider purchasing EPLI or Employment Related Practices Liability. EPLI protects you in the event of wrongful termination or sexual harassment or discrimination of some sort as an employer. It goes further to protect you in the event of a lawsuit that's brought against you, regardless of whether or not you're at fault. So let's say you fire somebody that has not been coming in to work for 2 weeks for just cause, in your opinion. Well, that person could come back and file some type of lawsuit, and even if it's baseless, you still have to defend yourself, and that costs money. So EPLI would protect you in the event of a lawsuit. Replacement cost is the cost to replace an item with today's materials, like, kind, and quality, at today's prices without taking into consideration its depreciation. An example of this would be if you purchased a TV set 5 years ago and now it's been stolen. The insurance company would come in and determine what it would cost to replace that with a new TV set, and that's the amount that you would be paid.